So tell us a little bit more about your financial philosophy.
Well, first of all, I think that what a lot of conventional wisdom is that people look back at trends that have happened over the past 30 years. Stocks have done this and therefore think that that has something to do with the future. And what you have to do is kind of eliminate that time period, because the one thing I know is that that time period will not be our future. Just think back to 1980. Interest rates were high. Today interest rates are low. In 1980, stock market valuations were near generational lows. Now they're at generational highs. In 1980, inflation was high. Today inflation is low. In 1980, government debt was low, and today government debt is high. In 1980, we didn't have the entitlement obligations that we're facing as a country. Basically, zero macroeconomic trends that were in place from 1980 are in common with the starting place of where we are today. So what you need to do is take the steps to look at economic history and say, well, what has happened to other countries throughout time that have had a debt to GDP ratio where ours is today? And I think what happens is that economic history is cruel to people that overweight their home country when they have high levels of debt. Basically, when you have a high level of debt, you know that something weird is going to happen, but you don't know what and you don't know when. Those are kind of the unfortunate things. But what you do know is that at some point in time, if you do not have growth, what you will end up with is a cycle of inflation and devaluation. And that's how these ideas become very, very interconnected. Every time in our history when we've had high levels of debt before, what has followed that are periods of inflation. And so we want to be thinking about how we can be prepared for that future economic environment. But any data that anyone tells you about that past period of 1980 to 2017, I would say completely throw it out, and you should only be looking at other data sets as you're looking at returns going forward.